Good afternoon, everyone, and thank you for coming. Our sympathies go out to all our residents impacted by the hurricanes of 2024. We at the Property Appraiser's Office want to do what we can to provide information to help owners repair and elevate, or rebuild their homes during the recovery process. There's a lot of information to cover during this session today, and as expected, we have a record number of attendees both in person and online. This session will be recorded and accessible on our website tomorrow. Additionally, on the homepage of our website, which is pcpao.gov, there's an entire section on storm damage information, which is what we will focus on today. For those joining online, if you have questions during the presentation, please enter them into the chat and we'll do our best to answer them promptly. For those in attendance here with us, please just raise your hand and wait to be acknowledged. We will get to you as soon as we're at a good stopping point. If your questions specifically relate to your property, we ask that you call our office at 727-464-3207 or email us directly at mike@pcpao.gov. If you are in attendance, please stay after the session and we can talk to you individually. Each of you has unique issues related to your property, the municipality you reside in, and the extent of your damage. We feel it best to address those issues one-on-one with you to provide you with the best information related to your specific circumstances. Thank you for joining us today, and now I will turn it over to Mr. Mike Twitty, your Pinellas County Property Appraiser.
All right, thank you, Kevin. Well, welcome everyone, both in person and online. I don't know which way to look. I got them surrounded. Got me surrounded today. So let me get some stuff out of the way so I can eyeball you all as best I can. So this is a new session for us. This is a session we hoped we never would have to actually hold. We're calling it After the Storm Answers, and we are going to try to do our best to let you walk away more informed about what our office can do within our lane. Obviously, we're not a building department. We don't handle permitting. We can give you, some of the insight of what we're seeing, at least within unincorporated Pinellas County, because I do communicate with them quite frequently. But we want to make sure you're aware of places you might be able to save money, you might be able to get some tax relief, and if you're contemplating elevating your home or rebuilding, where you might be able to get relief there as well. So we're going to talk through a bunch of those things. We'll start off, we already jumped onto the first slide here, and it's just really showing you several ways where you can get to those storm-related resources on our website. We've got a very robust FAQ section on there, and this is highlighting that, where you can jump to those After the Storm Answers FAQs. Come on in, folks, either side, and grab a cookie. All right, wake up. So this is just a little quick video just showing you how the FAQs are built up. But they're designed to be pretty concise and short, easy to read and digest, but then there's links that will jump you into more robust pages on those topics that you might be more interested in deep diving into. So one of the biggest questions we're getting is, I was displaced in 2024. Is there some type of property tax relief that I can get as a resident or as a property owner? And the answer is, for residential property, yes. And the way the Department of Revenue classifies residential property is up to 9 units. So basically, single family up to 9 unit, multifamily can potentially qualify for it. The way it works is you have up until March 1 to apply, so there's no rush to get there, because the way the mechanism works is you would have to complete this Department of Revenue application. It's called a DR 465. It's right there on our website. It's pretty short and sweet. You can get through it very quickly. And it's basically a prorated refund based on the number of days displaced. If it's Hurricane Helene, that's roughly about a quarter of the year, about 3 months roughly. So just doing rough math, and a lot of it's based on the improvement value, the pro rata share of your improvements to your entire property value, because it's only on the improvements, it's not on the land. It's the way they work it. So if I'm just using rough math here, if your improvements contributed roughly 33%, say a third of your overall value to your property, then times that 25%, which is the quarter of a year, turns into about 7 to 8% on average. Now it's going to wiggle based on those pro rata shares and those type of things. But that turns into about 7 or 8% of a tax bill. That if you apply and you meet all the criteria, the tax collector can rebate you that in early 2025. That's the way that works. So we have to get past January 1 before we can actually start to process those applications, and then we hand those off to the tax collector to actually produce those rebates. So these are some terms: substantial damage, FEMA 50% rule, FEMA 49% rule, different terms that you've been hearing a lot in the last several weeks that we didn't want to have to hear about, but we've had to take crash courses on this process. Substantial improvement and substantial damage are slightly different, but they generally trigger at that 50% rule. That's FEMA's standard number. If you're in City of St. Pete or unincorporated Pinellas County, City of Oldsmar, and a few others, you have the 49% rule. The way that works is FEMA is saying we don't want to keep repeating the problems of the past of the at-grade homes that continue to flood. And so if the cost in a substantial damage situation, if the cost to repair equals or exceeds, we'll just use 50% as an easy one, meets or exceeds 50%, then they're going to consider that substantially damaged. So you need to be able to repair it for under that 50% mark. If you hit that point, then the options are to elevate, relocate that structure, or demolish and rebuild, unfortunately. There are several avenues of potential recourse in the process. So just because if someone gets a substantial damage letter, that doesn't mean it's game over. That's just really almost a starting point. So each of your jurisdictions are going to be issuing substantial damage letters, and at different paces. Some are trying to get all the way through all of their substantial damage assessments. They've had inspectors in the field. Some jurisdictions are moving faster than others. I think you all realize that. Unincorporated county is getting close to wrapping up. I think they're planning to hopefully finish up this week, which will then free up some inspectors that they can release to some of the cities as well, because they have a big pool that are under contract from the Florida Department of Emergency Management. So then they're doing some number crunching. They're using some base level default damages. The inspectors in the field, it's a function of what those inspectors could see in the field. The way they're generally looking at that is they've got some default damage estimates, percentages, essentially. If they can't see the inside of the house, then they can't make specific interior calls on the level of damage. So they're having to use baseline defaults based on water depths. In many cases, they have water lines from the outside, from back in the early, when they had to do damage assessment process right after the storm. So we were able to, we worked in part of that process, helping to capture some of that along with the various building departments. So that's kind of how that works. There is, like I said, there is other layers of recourse. So if you get a substantial damage letter from your respective jurisdiction, then at that point, you can You want to get your contractor costs together. This is where you're going to get in the weeds. You want to get that detail together from a contractor, and you may want to get an outside appraisal. You can go in with those two documents, and you can argue your case for being still repairable, being under that threshold. So there will likely be an appeal process as well after that, even if you don't get relief there. But I know some of the jurisdictions are still trying to figure that out. I know I'm actually on a call tomorrow with unincorporated county to discuss what that, it'll likely be a special magistrate type process. I'm sorry, this lady over here had.
The question I have is the inspectors, they're coming city level, additional inspector that you're speaking.
Mm-hmm.
Everyone who got one of these letters, they have to address that property inspected on their own and come up with another appraisal or response to what they think should happen to the property?
Well, so each jurisdiction has to do what's per FEMA a substantial damage assessment. If they think that, for example, in this case, we'll just call it water depths were in excess of a certain number of feet, they're going to anticipate that that's on the bubble and they need to be looked at.
City level?
City level, yes. That's at each jurisdictional level. So those are going on right now at various paces. Yeah, she was asking if the substantial damage inspections were occurring at the jurisdictional level, so at each city's level, and yes, they are. Some of them are in conjunction with sharing some inspectors across because of contractors. Like I was saying, the county will be able to release some of those that they've been working with to help some of the cities here shortly. Many of you have probably become familiar with the FEMA letter on our website. A lot of people thought, I want to dispose of a myth, a lot of people thought we sent out this letter. We did not send this letter out. This letter has been on our website for over a decade. So it's just built into our website. It does have a date on it, so I think and it looks like a letter, so people thought it was mailed out, but it was not distributed in that fashion. It's really there to help. And it's really designed, you got to remember what we do is we value for tax assessment purposes. We're not really valuing property assuming that it's going to get wiped out in a storm. So while this works in most cases when people are dealing with substantial improvement scenarios, they're putting in new windows and doors, or they're putting a new roof on their house, usually the FEMA letter here, that number will usually get them to where they need to be to get that work done. In this case, there are going to be a lot that don't quite get there. The costs are much higher. So if you look at the letter closely, it does reference that there are two methods that FEMA allows to set that improvement value. So that's the depreciated value of your structure, of your primary structure. So you can either get it from the property appraiser's office, which is what you have there on the letter, or you can engage an independent third-party appraiser to do that work. The reason those numbers are often different is because you've got, again, we're doing it for tax assessment purposes. We're valuing the entire property as a whole, land, building, and all your extra features, so your docks, your pools, things that don't count in that structure value. And then we're doing an allocation based on our cost approach between those components. And we scale up the overall value to approximate market as of January 1 of 2024. So our values are almost a year old already, because we only value on January 1.
Repeat that last paragraph slowly for me.
So, yes, a gentleman just asked if I could repeat that slowly. So the way we arrive at that is we're doing it for tax assessment purposes. We do our evaluation of the entire property, so we're looking at comparable sales is our biggest driver of setting our values. So that includes obsolescence and depreciation on those structures at that point, and we're looking at locational factors and all those things that affect land value. That's all taken into consideration in our overall value. Then that number gets scaled up. We divide it by 85% because there's a 15% in general deduction across the board for cost of sales in our models. So FEMA's rules say we're allowed to adjust those to approximate market. So that's what we do. We bring that back up. Then we allocate it between land, structure, also known as building, and extra features. So that's what you see on that letter. You see the three numbers. You'll see those, the land, building, and extra features, and then you'll see it multiplied by 50%. Now, I will let you know, going forward, we're starting to build some more smart things into our letter so that it will be smart to the jurisdiction and trigger 49 or 50%. It'll do the appropriate math. It's going to start flipping. We're not quite there yet. We're actually baking it into a new process I'm going to tell you about in a minute first, and then it'll get back into the traditional letter. So let's talk about the private sector appraisals for a moment. There are a lot of people already out there, engaging appraisers to undertake these. They want to be, get ahead of the curve because they know they're going to stack up, they're going to get busy. Fees will likely go up because of supply and demand, and so a lot of them are jumping in. Just want to make, if you're talking to appraisers out there, you want to make sure you're asking the type of appraisal you want is an actual cash value appraisal. This is not your normal traditional market appraisal that you would get for lending purposes. Again, they're valuing, in normal cases, you're valuing the entire property, land, building, and extra features. On an actual cash value appraisal, that's generally focused on the depreciated value of that structure. It's more of an insurance type. It's widely used in the insurance industry. So it's a different type of appraisal product. They also call them a 50% rule appraisal. So if the appraiser you're talking to doesn't know either of those terminologies, you need to call somebody else. And the other thing they need to realize is it needs to be a retrospective appraisal. So retrospective meaning back in time. So you're going back pre-storm. So generally they're the day before the storm occurred in most cases. And they can do that. So it'll have there's two things. You have an effective date of appraisal, that's your retrospective date, and then you have a date of report, which it would be today, if I was doing the appraisal today. So those are the two key dates that you'll look for. Now, in order for them to do that, you're going to have to provide them documentation, right, photographs of what the property looked like before, because likely you've already demucked and gutted a lot of the house, and the kitchen's gone and all the cabinetry and the floors are gone. So important for them to get a good picture of what it looked like before. A reason that a lot of times our structure value is going to look different than third-party appraisers. Well, they're able to get in, see all the interior, see all those things that you're providing them in that documentation. You got to remember, most of the properties that we're valuing from the outside. We don't see the interior unless it was a recent sale. So, welcome. It's, unless we see, MLS photos, those types of things from a recent transaction, then we could easily have more depreciation on that structure than there might need to be. And in those cases, what we're actually offering now is a building value reconsideration. So this is new. We know there's going to be a backlog in hiring private appraisers. So if you're close with your numbers, but you're not quite there using our FEMA letter, and you think the inside of your house is at a quality and condition level that we may not be accounting for, and if you're homesteaded, it's not gonna affect your taxes because you're protected under Save Our Homes cap. Okay, as long as you didn't go and turn your garage into living area or do something like that, and that still wouldn't get you in 2024. That would be a down the road thing. But those are internal decisions you would have to make that may say it might be worth paying a few more dollars in taxes to be able to repair my home. So I can't make those decisions for y'all. But you can, with this, and let me jump to it, here it is. This pre-storm building value reconsideration, we're calling it a BVR because we're in the world of acronyms and what we do, and we had to come up with something. All we're looking for is some photographic evidence pre-storm, and you might have some other additional documentation. You don't have to provide contractor invoices, but it can help if you have that. Maybe you did some substantial stuff in the last 24 months. That would be helpful. So it helps us to, because we're only going to look and consider factual changes. So we're going to look at quality and condition, essentially. You know, is there a sub-area change? You know, that an enclosed or a open porch became an enclosed porch or something like that, something that might move the needle on value and allow us to justify that. Because we're having to do something out of the box that's never been done. We always, you know, statutorily we have to deliver a January 1 number, but we're going to be doing something. We've created a different database just for this purpose, for the structures. They'll still run through our 2024 valuation models and cost models, but we will be able to adjust for those factual conditions now that we have more information. So the other thing that it can help you with going forward too, if you're still within your 4 walls, you didn't have any sub-area changes, it's all, you know, all good there, you're actually going to help your portability for the future as well, because now you've increased the difference between your just value and your assessed value. So if you decide to repair and then you end up going to deciding to buy a new homestead somewhere else and you want to move, that's going to help your port number as well. And if you're doing providing that photographic evidence, we do have a PDF form fillable document on our website right now. It only takes a couple minutes to fill out. We're going to be building a more robust web form that's even easier to submit, but right now you have to download it, open it in Adobe Reader to make the submit button work. When you hit that submit form after you've filled it out, it'll roll up that application, attach it to that email, and then you just attach whatever other documentations, your photos, could be videos. You know, we don't care if it's your grandchild's birthday party and they're in the foreground. If you want to blur their face out, that's fine. We're being very lenient on, you know, what we want to look at. We want to help everybody out as much as we can and smooth the process out. Yes.
Is this predicting how much the value is out of the entire value of your property, or is this going to increase the value of your overall property such that the basis of the property eventually is going to change the taxation of your property?
Well, I think you walked in after I said that if you have a homestead and a Save Our Homes cap in place, you're going to be protected. So even if you have that value movement, it doesn't matter.
But it will, you're protected because of those things.
Correct.
Still is.
Yes, it could ultimately for 2025, it could potentially change the just value. However, if you had that damage, it's actually going to go down for 2025 because we're going to end up writing down a lot of improvements. So this is a temporary snapshot in time pre-storm. I think this lady here.
Can you explain the difference between just value and appraised value?
Yeah, so it's not appraised value. It would be, I think you mean assessed value? Yeah. So if you're in the, you know, dealing with a third-party appraiser, usually you're just dealing with market value. You know, you get your house refinanced, it's a new purchase, bank requires you to get a loan and an appraisal, and it's a market value appraisal, right? That's what everybody's most accustomed to. In our world, for assessment purposes, we have just market value. So that's our equivalent of market value in the fee world, as they call it. And then we have assessed value. And assessed value, the year after you purchase a property, is going to be the same as just market. But after that, now it starts getting affected by assessment caps. So if you've got the Save Our Homes cap on there, which limits you to 3% upward movement, or a 10% non-homestead cap, you're going to start to see if just market is still rising, and if it's rising at a greater rate than your cap is allowing your assessed value to move. That's what creates a differential between those values. So that's where assessed value is different than just market value. And then from assessed value, we take away exemptions. So that's where your $50,000 homestead exemption comes off. Any low-income senior exemptions, disability exemptions, all those things, takes us down to another value called taxable value. And taxable value times your millage rates, which are set by your taxing authorities. And in Pinellas County, we have a load of them. We have roughly 60 of them. You know, everything from your cities, your county's general fund, your school board, SWIFMUD, which is, you know, the water management district. There's a litany of them. So the taxing rates times that taxable value is ultimately what turns into a tax bill. And I think we had a question over here.
So you mentioned the homestead and the cap. What if you have homestead, but you've only been in the home for a year? Don't you have that cap starting at 3 years?
No, the cap starts the year after you apply. So after it becomes effective. So when did you purchase the home?
First
Of
last
2024 or 23. So you applied for 2024. So that became effective, and it will kick in for 2025. It will keep you won't be able, your assessed value will not be able to increase by more than 3%. So another thing that is in Florida law, which is a great thing, it's called, we refer to it as the Calamity Provision. So this is for properties that have been impacted by acts of God, some form of disaster, and makes the home essentially uninhabitable. You can repair or rebuild that property or elevate it up to 110% of the original building square footage and not affect your assessed value cap. So where that's really great is especially on a new build. So if you decide, all right, I've flooded enough, I'm ready to swing the wrecking ball and start over, and I want to get up out of harm's way, then you can do that, and you'll protect your Save Our Homes cap if you're homesteaded up to 110% of that original square footage. Anything over does get treated as new construction, so you've got to do some math there, and we'll help you with that. It does get a little tricky because it's not as simple as just saying, oh, my living area is 2,000 square feet, so I'm going to build, you know, and you can do some quick math there. We use something called effective area to do this calculation, and all that information is on our website, so if you want to delve into seeing how we do that math. I alluded to sub areas. So sub areas would be like your living area. We consider that, we call that base. Your garage is a percentage of base. So let's just use simple numbers. Let's say base was $100. An enclosed garage is generally about 35% of base. So it's valued much lower. You know, it's considered much lower in our cost models and in our sales comparison models when it runs its numbers. But we basically, it does a weighted average because of those percentages. We take that square footage and you end up having an effective area that's actually bigger than your house, but it's a weighted average based on those. Then we multiply that by the 1.1, and then you've got to figure out what you're actually going to build and how you're going to allocate your various sub areas out of that total effective area. I know it gets a little in the weeds. And like I said, if you get to where you've done your floor plans or worked with an architect, you can bring those to us. We'll look at it and we'll tag we'll say, okay, well, that's this type of sub area, that's this, and we can do that math for you. Yes, ma'am.
If you were to like take the existing structure and turn it into space, vents, storage, and then you build structure on structure, does the garage count towards 110% or no? The part below.
Right, so you're abandoning the lower level, probably extending the walls, building a new floor on top of that, so you're getting your what they call BFE or base flood elevation up to code where it needs to be. It would still be in it, you know, you're going to still end up breaking the 110, but again, it's going to be valued much lower than the living space would be up above. And if you retain that, it's likely even going to be lower because it's going to have more depreciation on it if you keep that lower area as opposed to building it new. It could be. It could be. I don't know that it's going to be worth it, but, you know, because it may cost you more on the build cost to have to try and work with an existing, you know, improvement. That's something really for the, you know, you have to have that conversation with your builder of whether it makes sense, if that's going to save you any money. You know, I wouldn't really necessarily do it for the tax savings as much if it's going to really contribute on the build and save you money there.
What about if you're in the mode of, I'm not sure if I'm just my uncle, and say, okay, sell property and buy another house, and maybe it's also within 110% of the size. You know, can I transfer my homestead? Does the calamity provision in any way transfer to the new property if it's within, you know, or really am I married now to this property and I really have to make sure I stick with this property? Or if I try to go somewhere else, you know, and I pay a fortune for that property, now I've sort of lost all my savings on that.
Right. The way it's written, it's really designed for the property that you're in, not necessarily go pick out another house and claim calamity there. Now, you do have a 5-year window. That's a statutory change. It used to be 3 years from the January 1 following the event. Now, as of this coming January 1, it changes to 5 years. So you have a nice window to work with. So some of the people that, you know, may need to work through elevation grants and, you know, FEMA reimbursement things, which we know that process can take years, you have a longer runway to work with. You'll have the 5 years, and what was I going to say about that? The 5 years kicks in on January 1 of 2025 is when it starts. And yes, and it starts when you pull your permit. So all you have to do is initiate a permit within the 5-year window.
Mike,
Yes, sir.
Mike.
I'm sorry, I'll get over there in just a sec. Oh, she's got the mic. All right.
So you could go over what you spoke to that lady about as far as if you build on top.
Right.
Because if you build on top and you build within the same square footage, your tax base would not change, but it sounds like you said possibly it would.
Well, if you build on top of it and it's the same footprint, you're going to end up having more than 110% square footage. You're basically going to have.
But it's not living space.
Right, but it's all of your square footage is the way it's based on. It's not just living area. The 110 is not just on living area. It's on effective area, like I was trying to explain, where it's a weighted average of all the different sub areas.
So basically you're saying build so it was explained by my city. They said as long as you only, you know, if you went in the same footprint, that it wouldn't go up. But what you're saying is you're going to count that space, so our taxes definitely will go up.
If it's enclosed, then there is going to be some movement. If it's not, if it's just on open pilings.
It's the base.
I understand. Right. That's not the way the statute's written. I actually tried to change it 2 years ago. I championed a constitutional amendment. It was on your ballot in 2022. Unfortunately, statewide, it did not pass by about 1.5 points, and it would have allowed every one of you to elevate your home even before a calamity and exempt out the lower level. Because my view of it is, I know what the financial burden is. You know, it's a huge investment to have to build up. You know, your foundational costs are higher. You're essentially forced to build a larger garage than you would normally actually build. You know, you could make the argument there's some obsolescence in the size, super adequacy in the size of that garage for a typical homeowner. But most people are going to enclose it because you're up and you don't want it to be unsightly.
I'm hearing different cities and municipalities that have the look back, whether it's county unincorporated or St. Pete Beach. And is there a difference per city as far as look back?
Every one of them is different. So that falls upon each municipality to adopt that look back within their own floodplain ordinance. So I've started building out a matrix of all 24 municipalities and unincorporated county. Because the other thing is you have the threshold of who's 49% and who's 50%, and then you have the look back, and then you have another thing called freeboard. And freeboard is how many feet above base flood elevation they require you to build, and that's different in different cities. So I've been working with the building officials to try and get all that data put together so we can share that with everyone countywide, because that is such a form of confusion. Nobody knows what they're dealing with. The look backs in St. Pete, they're permit to permit. So you open a permit, you close it, you can open another permit. If you have an open permit when you got hit by the storm, then they're going to count the work that was going on in that permit in your 49% calculation. We've got jurisdictions that have look backs as far as 10 years. We have a couple that are 5. We have a bunch that are 1.
How much is the unincorporated?
It's 1 year.
It is 1 year. Thank you.
1 year for unincorporated. Yes, sure.
Can the Calamity Provision be utilized even if the damaged home is livable following the calamity?
Yes, if it got water inside, then yes. Yeah, she asked if Calamity Provision could be utilized even if the home she was able to stay in the home, but she did take water. And I said yes. Oh, sorry. I keep forgetting we only got one microphone, so.
2 points. First of all, I learned at my commission meeting last night that our city is calculating the square footage differently than the property appraisers are. So
Well, they don't do the calculation for Calamity. That's totally a different thing.
this lady said that her city told her that her square footage wouldn't change, but you guys are telling her that it will. That's probably because her city is doing the same thing that mine is. When you raise your home, they say it won't change, and you say it will. It's because they're calculating it differently. But also, when you say that when you raise your house, anything over 110% will be taxed as new to construction. Well, what happens? Is that now
The next year, it's under the cap.
it's under the cap?
Yep.
Okay, thank you.
So it gets cap protection from there going forward. Yes, I would prefer it to be like the constitutional amendment we were championing. And I've already had several conversations with our legislative delegation, as well as our former Speaker of the House, who is local here in Pinellas, about these issues and trying to look at, is there a way, at least on a calamity situation, not a proactive situation, but just in a reactive under the current calamity language, is there a way to help people more? Can we move the 110 to 125, for example? Can we do something to give them, because a lot of them, those houses are fairly small. A lot of them are under 1,500 square feet. And if you're going to go through that effort to rebuild, give them an opportunity to build some more equity to help them in the payback down, in the long game, because they're having to make this sizable investment to get off the ground and rebuild new. So we're looking at some options, but I can't promise they're going to happen. We really thought that adjustment to calamity to a proactive state was really going to work last time, and unfortunately, some media jumped in at the 11th hour and said, "Oh, this sounds like a great idea, but just vote no, because we're not really sure." And that worked against us. That was basically the way it shook out, and we came up a little bit shy. And as you all know, after we just had to vote on a lot of constitutional amendments last week, and we know that they're not always written in crystal clear language. So unfortunately, the language we got saddled with for our amendment was not necessarily of my choosing, and it it confused, I think, a lot of people. They had a hard time wrapping their heads around it, and if you have a hard time doing that, it's a lot easier to vote no. So if we do champion that again in a different form and bring it forward, that would be one of my requirements, is that we've got to find a way to make that more digestible. Sorry.
If we go because we're under the 50% rule, what are the impacts if we get hit with another hurricane within the next 2 years?
Depends on your look back. Because you're talking about repairing at grade. And this even gets trickier because some of the floodplain ordinances I've looked at, it looks like they've written in substantial improvement or substantial damage slightly differently. And some of them, I believe, are going to, for substantial damage purposes, not count the lookbacks against people, which I would be okay with because nobody knows those are coming. That's an unplanned event. The real reason for that, that 49 or 50% rule is designed, and the lookbacks, I should say, the lookbacks are really designed for substantial improvement. They're trying to take away people sitting there and incrementally continuing to improve down at grade in harm's way. So that's the meaning or the intent of those lookbacks. Unfortunately, they have an unforeseen unintended consequence of potentially affecting substantial damage properties. You might have just completely renovated your home, closed your permits out, but maybe you've got a 5-year look back, and now you just got hammered by the storm. So I'm hoping that those jurisdictions are able to give some leniency on lookbacks for substantial damage. But you need to have those conversations with your respective jurisdictions.
So I hear the term remediated a lot thrown around, and now some people are advertising their homes for sale and say they've been remediated. Is that a term that the county, municipality, cities use? Is it an actual thing, or is it something made up that people just are using?
Yeah, I think it can have different meanings to different people. It's not a concrete term like substantial damage or substantial improvement. I don't believe it's codified that way. So remediated might mean, they demucked and they cut their drywall out and it's sitting there ready for the next owner to put it back together, assuming they don't get it, substantially damaged from the city. This gentleman over here has been waiting for quite a while, KJ.
Mike, you had talked about relief if for a short period of time while people are out of their houses. If you decide to either build above or scrape the lot and rebuild, you may be out of your house for a year or so. Do you get extended property tax relief through that period of time?
What you end up doing is rewrite down your improvement, because your improvement's going to go away. So you're going to be down to essentially land value while you're going through that process until you CO that new structure. And then we're going to do the calamity calculation and put that back on at that assessed value. It's like you're starting again at that point in time when it finishes.
So you'll get it on the backside because the houses will be more valuable because they've been raised up.
Right. Kyle, can you get to this gentleman? His question may have been answered by now. I'm not sure.
My hearing is so bad, it probably has been. Thank you. To ensure enjoy the Calamity Provision over the next 5 years, anything or get a permit or somewhere, or you'll do it automatically?
We'll pick up on it. What typically happens is if say you knock down a house, we'll pick up on the demo permit and we'll send out what we call internally as our demo letter. So you'll get a demo letter that will ask you if you're a homesteader, it'll say, is your intent to keep your homestead in place? Are you rebuilding, or would you like it removed? Because some people are going to demo and they're going to sell their lot, and they might want to go ahead and pull their homestead off because now they're going to use portability instead. So, that could be the case like if it were this year and somebody said, well, I'm going to go ahead, scrape my house. I'm going to let the property appraiser know that as of 1/1/2025, just go ahead and pull my homestead off because I'm going to buy something else and I want to get the full amount of my port and be able to move it to the next property.
And that ties it back to the storm event somehow? Or it doesn't even matter?
Well, Calamity, we're gonna run off that 5-year, that January 1 after the storm, and you have a 5-year clock.
Anybody that does it within that window?
Right. Yes. Yeah. It needs to be the same owner. So you can't just go musical chairs, buying and selling houses and do it. One other thing I wanted to point out on Calamity, so if it's a residential property and the home happened to be under 1,500 square feet, say it was only 800 square feet, then you can go all the way to 1,500 and be protected. So there are a bunch of small homes out on the beaches, 700 to 1,000 square feet. Those can actually be rebuilt up to 1,500 and still be under the cap. It's 1,500 square feet or 110%, whichever is greater, that differential. We already pretty much touched base on this about being able to keep your homestead in place and what those options are. Just to remind you all, if you do elect to utilize portability, you have a 3-year, it's a 3 tax year window. So if you're doing that math, it's not 3 years from when you dispose of the property. That's what most people think. But you go back to January 1 of the year that you sell it and do your 3 years from there. And you need to own and occupy and apply for your next homestead before that 3-year clock runs out. So that was another thing we worked on to extend. It used to only be 2 years. And what would happen was people would sell late in a year and you had already burned up the majority of that tax year. And now you had literally, you might have a year and a day and to basically replace that homestead. And if you were building a new house or you're waiting on, say you had a pre-construction contract somewhere or you went through, some marital disturbance and you're trying to figure things out financially and you need a little more time, a lot of people were starting to lose their port. So that was something, again, that we championed and got that moved to 3 years. Yes, ma'am.
My question, I just want to, you may have just covered this, just to reiterate. I think I fall under the repair situation.
Okay.
Someone's going to come look at the property at the city level. They're going to issue out a letter that I need to respond to, which of these involve so I respond to a letter. I don't have to file anything on my own.
So your city is going to send you, if you're substantially damaged, they're going to send you a letter and give you some next steps because you'll be able to request, I would like a reassessment. So that's when they get more in the weeds. You give them your contractor costs, you might have an outside appraisal, or you've contacted us and you've gotten a building value reconsideration that moved your structure value. One of those, probably 2 of those documents is what you would need to go forward and sit down with them. And now they're going to look at your property more specifically because you got to remember they might have valued it or done the damage estimate from the curb, essentially. Looking at it, they couldn't get inside or they knocked on the door, nobody was home. Which is not atypical because unfortunately so many people are displaced. So it's an opportunity. I'll use a good example. I can tell you for unincorporated county, the floor damage percentage by default, if they can't see anything, it's 50%, okay, on the cost of flooring. Well, it might be a house that has terrazzo floors and it's clean up and polish and it should be 5% or 10% instead of 50%. So those are the types of things that when you get into that reassessment process, you can go line item by line item of those building components and work through that with them and try. And I think most of the building officials are going to be, try to work with people. And they also realize that contractors' numbers can be blown up because of supply and demand pressures. So they're going to soften some of those numbers too, so that it's not overly punitive. So there's that process, and then if you don't get relief there, a lot of the jurisdictions I think are going to have an appeal process too, which may be a special magistrate.
Mike, I'm going to ask a question if I may.
Sure.
What if you don't get a substantially damaged letter, and when will you know you won't get one?
Well, again, so some cities are what this is, again, I've heard some cities are going to send out letters to everybody. And if they're not substantially damaged, they're going to say, come in and apply for permits. You know, there's jurisdictions like St. Pete that's just saying right now, just come in and apply for permits, period. And they're still doing their substantial damage determination. But they're going to, their theory is, well, we're going to pick up on them as we're doing the permit process. Then we'll determine if they're substantially damaged or not while we're going through the permitting. So everybody's got, unfortunately, a little bit of a different philosophy. Some of it's about scale. You know, it's about how many people they have to work the system, how big that jurisdiction is, how many properties they have that they think are damaged, and they have to kind of flex their plan a little bit to their resources.
Okay,
So-
one follow-up from online. If you are not substantially damaged, do you still have to comply with the FEMA 50% rule to repair your damages?
Yes, if you're in the special flood hazard area, because that's a substantial improvement, essentially.
So this is, maybe even if it's not calamity provision, but we always can transfer our homestead. So it's still back to this benefit. It says here you have, you could transfer your Save Our Home benefit. Just to understand what that term means, because in the value history on your webpage, you have something called the assessed value Save Our Home cap. There's also the just market value. And then my understanding is the Save Our Home benefit, the difference between and the Save.
Correct.
And then now you go, the difference between, now you go and you have a home that's, is that back?
Yes, in a nutshell, yes. As long as it's a lateral move or an upward move in value, not based on what you necessarily pay for it, it goes by the two tax rolls. So what we had on your last property versus what we end up valuing your next property, as long as it's lateral or up, you get the full 250 in that circumstance. Correct, it's that differential. If you scale down, so if you downsized, then it would just prorate downwards.
But it is subject to a maximum of 500,000.
Yes, there is a maximum.
That's the maximum you can pour.
Maximum amount you can pour is 500,000. Now we have a lot of homeowners that actually have $1 million worth of protection, but they can't move that whole amount, right? They can move up to 500. All right. Well, we've covered a lot of ground. There's a lot of stuff. We'll still stick around for more questions. I wanted to let you know that we do these public education sessions. We try to do them monthly. In December, we usually take that month off. It's hard to get people too excited about coming to visit us. But as we move into January and February, we'll start doing sessions. We try to make them very timely based on the tax roll calendar. So we get into exemptions related things for personal exemptions, understanding capping more, Save Our Homes cap, first-time home buyer type information. We do demos on maximizing the use of our website. We do public ed for real estate professionals, the legal profession, you know, everybody in that real estate realm, whether they're in sales, insurance, lending. We are always able to give them some good takeaway nuggets that help them with their clients and help educate the public better so that they can not make missteps when they're dealing with their properties. We have our own in-house counsel. He's actually here with us today, Alex Luca. He's our exemptions director as well. He does a great session on In the Weeds with deeds and trusts, so he can help with those types of things. So if you're contemplating putting property in a trust, you want to keep it homesteaded, send that trust language over to our office, ask for Alex. He will vet that language before it gets, before it gets signed off on, and make sure that it is appropriate so that it doesn't jeopardize your homestead. So very important stuff. But we're always here to help. We've got a great crew. We're going to stick around afterwards. So if anybody has specific questions related to their properties, we can do that. This young lady has another question.
Does the water mitigation
99%.
The water mitigation.
Had to pay
Oh.
to have them take the wall, to like basically prevent
Right.
mold from developing? Do you know?
I think
And
in
is that-
most cases, no, but I've seen some contradictory things depending on the jurisdiction. So, but basically muck out, dry out doesn't count against. I've seen some varying things on demo. But again, I think that's interpreted by the jurisdiction. Absolutely.
Is there a way? Well, sending it to everybody whose email was signed up, or how does that
We
work?
can do that.
Thank you.
Sure. Other ways you can follow us, we've got 3 different e-newsletters you can sign up for on our website. One caters to homeowners, one for business owners, and one for real estate professionals. So again, we try to push that out monthly with timely information. Might be about some new legislative changes that might offer a new exemption, or some change in tax laws that could be interesting or helpful to you. Obviously, we always promote our upcoming session of what's going on and what we're going to be talking about. And then we have our Facebook page you can follow, where we're always pushing out timely stuff as well. We'll be dripping out a lot of these FAQs related to the storm to help people. So those are great to share with your friends and neighbors. And then we have our YouTube channel, where we'll post this video, and we have past sessions that are recorded on there as well, and you can access that right through our website. Yes.
With the provision, would it behoove some of us to wait until January 1st of 2025 to apply for a permit, so we get the full 5 years if we decide later to move?
It doesn't matter. It's going to be calculated from January 1 regardless. Yeah, it always, that 5 years starts at the January 1 following the event.
Oh, one more.
Yeah, one more. If we do want to get a private appraisal or use your BVR tool, who makes that final decision, and would it make a difference whether we just used your BVR or hired?
Well, those are decisions you're going to have to make based on the numbers at hand and whether it works with your repair costs. The ultimate decision is made by your respective jurisdiction. So your building officials or your floodplain administrators are going to have to, they're going to be the ones that are going to approve costs and approve appraisals. So they're going to approve that private appraisal. If we do our process, I don't think they have heartburn with that. So, but if you do an outside appraisal, there's no guarantee that they're going to accept it. It's really important that whoever you engage as an appraiser is familiar with that jurisdiction and their appraisal review checklist. A lot of them have them, or they use the counties. So I'm glad you brought that up, because I meant to talk about that earlier. So make sure that they're familiar with the rules of the road when it comes to doing those types of appraisals. Because that, what you don't want is you don't want your building official and your appraiser getting swords crossed. That's not going to help you. And you don't want to have to go then and pay for a second appraisal. And we do have, if you're looking for search tools in our FAQs, we do have how do I find an independent appraiser. So we have the link where you can go in and you can search for all the state certified appraisers in the state, and you can narrow it down by jurisdiction or certification type, whether they're residential or certified general. Certified generals are legally able to appraise any type of property in the state, and residential is limited to residential. I will say the majority of residential, or got a better chance of residential appraisers having done some of these before, but there are quite a few cert gens that have done them as well. Yes.
Talk a little bit more about the increased cost of compliance with the special flood hazard areas and how that works with the FEMA 50% rule.
I'm sorry, you said increased cost of compliance?
$30,000 increased cost of compliance with the special flood areas. I believe I'm in one of those.
Okay.
But how does that work with the 50?
So I'm not an insurance expert, but I'll attempt to answer it. So my understanding is if you get a substantial damage letter from your jurisdiction, you can then apply through your insurance company. You can make a claim for ICC, increased cost of compliance. That's an additional 30 grand on top of your NFIP flood payout.
So 200.
Well, no. So the maximum, even with NFIP is $250, regardless if ICC is included. So that's a little trick there. But if they gave you if they only gave you $200 on the flood, then you could get $230. $250 is the ultimate cap, is what I've heard from insurance professionals. Want to tell you about another service. This is not through our office, but I like to promote it because it does protect a lot of people. The Property Fraud Alert Service, offered for free through our clerk of the court. You can go on there to this link, or you can go straight to My Pinellas Clerk and just look for the logo for the Property Fraud Alert Service and click in through there. It takes about a minute to sign up. All you do is put in your name, give them an email address or a phone number where you want to be texted. It will send you an alert if anything gets recorded in official records with your name on it or something similar. So you can vet it before something bad might happen. So unfortunately, the fraud that does occur, in many cases, it's people that have a lot of equity in their home or don't have a mortgage at all, and may be elderly. They can become that prime target. And unfortunately, a lot of times they won't know about it until 6 months down the road. And by that time, that person has already done a false deed, put it in their name, and taken a mortgage out against that property. So this will alert you much quicker in that process, and then you can act accordingly. You can engage law enforcement, whatever you need to do to try and rectify that situation. So just want to make sure you're aware that service is out there. You'll hear a lot of advertise where you can pay for these types of services, but this one does a pretty good job, and it'll even, it's even good when you're working with your contractors now, because if it's enough work that they're having to pull a notice of commencement or file a notice of commencement, that's going to be recorded in records, and you're going to get notification, and your contractor's doing the right thing. So satisfaction of the mortgage, refinances, all those types of things go through official records, and you'll see that activity.
So since people do have the same name as other people, you're going to get alerts on things you don't know about.
Right.
So,
but it'll give you an OR booking page link that you can open up the document and look at it to see, oh, that's not me. That's not my property.
Not me, not my
property. That's a different Jane Smith.
But should you go down and check anyway to see if somebody's impersonating you?
You can go online at the clerk's office, put in your name, okay, that you registered with, okay, and a date range, okay? So, and a matter of fact, I had a lady call today who got an alert. I understand.
Right.
But you will see all the names that are exactly your names, and you can go through every one of them and see if any of them pertain to your property. It's not just, you can look at anything that's recorded on the clerk's website. If it doesn't pertain to you, then you will know, because it's not associated with your property. I had a lady call today who got an alert. She was all concerned. I went online. It was a notice of commencement because she hired a roofer to repair her roof.
Right. But it does include, when they send you that alert, you'll get a link. So you can just open that document and look at it and see if that, because it's not your name that you're as concerned about as if they're attaching to your real estate or trying to take your real estate. All right. Well, that puts us right up pretty close to on time. We went over a little bit. We're happy to hang out and answer any more in the weeds type questions. Those of you online, I know they've been trying to answer a bunch of things through chat. If you don't get an answer on there, since we're closing out the session, shoot that in to mike@pcpao.gov, and we'll make sure those get answered as well. We appreciate you all joining us today. We wish you all the best in your recovery, and please let us know if we can help in any other way. Thank you, guys. Thank you all.